So I'm trying to figure out where to start. Maybe the thing is just kind of start from the beginning on how a construction loan works, especially a construction and perm financing. So right here is basically kind of our guidelines and how it works. So there's a lot of pages. So really I'm going to break this down in probably a couple different videos and talk about, how construction perm finance works. So there's a bunch of different things in here, how we make it work, how we make it easier, how I'm better than everybody else, which really it's not that. I'm going to be honest with you. If you know, like, and trust somebody, that's who you should use. They got a good product. Is it what you want burn rate when you're all said and done? And what's it going to cost? Really, that's how you should be basing all your financial decisions on how you build your house. I mean, it's plain and simple. So I can kind of go through all this stuff, how my bank that I work for makes it easier and better than everybody else. And that's, wherever I work, that's how I think. I'm at the best spot. Really, I can skip a lot of this stuff. Just get down to the nitty gritty. So what you really want to know is how a construction loan works. There's a couple different ones that you can use. You can use, a two-time close, a one-time close, a one-fee close is how some other banks or lenders like to disguise a two-time close. Is we're going to send it off to a small bank and then we're going to come back behind with a fixed rate mortgage. You're still paying two closes versus one close. You got to pay the bank, or you're going to pay several banks. The worst financing is if it's builder financing. Builder financing means that the builder has to take out the financing, and guess what happens? The builder does not get the same rate that you do. Now, if I'm lending to a builder, I'm going to lend to a builder at a much higher rate, and I'm going to charge him points. And what's the builder going to do? He doesn't give you a discount on that. He's going to put that in the price of the home. So if you go to the builder and say, hey, I got construction financing lined up, can you build me a home? Yeah, he should be giving you a discount because you have construction financing lined up. So say if he's built this house over here, for $400,000 and he financed it, and you want the exact same house, no difference, is he going to build it for $400,000? Well, it might be 6 months, 7 months later, and the cost of construction has gone up. That's fair. But if it's exactly the same, they're building, one here at the same time and one here at a time, you have finance provided and he has to finance this one. Guess what? On this one here, he's going to pay probably 6 to 7% interest rate and probably 1 or 2 points. This one here, where you have your own financing, he doesn't have to do anything. He just has to build the house. So which one does the builder really want to do more than the other? This is a safer bet for him because you have the financing set up. This one here, he has to finance and he has to worry about the customer, the borrower at the end, being able to buy it. There's a risk. So there's going to be a premium on that house. So he wants to make more money on this house than on this house.